It was the year 1997, the same year the world mourned the loss of the Princess Diana. And the movie Titanic was just about to become a box office sensation. But while the world was captivated by these events, the financial world was about to get rocked by one of the biggest mining scandals in history. A story of gold, greed, and deceit that will change forever how we classify mineral resources and reserves. This is the story of Bre-X. So what was exactly Bre-X? Well, Bre-X was a Canadian mining company that in the early 1990s claimed that has discovered a massive gold deposit in Busan, Indonesia. We're talking about an estimated 70 million ounces of gold, enough to make Bre-X one of the most valuable companies in the world almost overnight. People were excited, investors were scrambling to get a piece of this stock, and the price soared. Everybody wanted to be on what was going to be the gold finding of the century. But as the saying goes, if something looks too good to be true, probably it's not. As it turned out, the entire gold finding was a complete fraud. The samples had been tampered with. They were salted with gold to make it look like the Busan site was a treasure. This deception was masterminded by a geologist called Michael de Guzman. But how was the fraud uncovered? That's where Freeport-McMoRan, a major mining company, comes into the picture. Freeport was brought in to conduct due diligence on the Busan site before a planned joint venture with Bre-X. When Freeport geologists conducted their own drilling, they couldn't replicate the spectacular result that Bre-X had reported. In fact, they found little to no gold at all. Freeport findings set off alarm bells, leading to a deeper investigation that ultimately exposed their entire scheme. By the time the truth came out, billions of dollars had been lost, and countless of investors were left with worthless stock. The shockwaves from the Bre-X scandal spread far and wide, shaking confidence in the mining industry. The Bre-X scandal was a major call for the mining world. It exposed major flaws in how mineral resources and reserves were reported. Before Bre-X, there were no universally accepted standards for what could be called resource or a reserve. Companies could say whatever they wanted, and there was little oversight. The industry knew something had to change. This is where the creation of the modern classification system for resources and reserves comes in. So, what does this classification system look like? Let's break it down into its key components. 1. Mineral resources. The first part of this system is mineral resources. A mineral resource is a concentration of minerals in the ground that has potential economic value. Resources are further classified into 3 categories based on the level of geological competence. Inferred resources. These are the less certain. Inferred resources are based on limited geological information. And while there's evidence that minerals are present, the data isn't enough to make precise estimates. Think of inferred resources as an educated guess, promising, but not something that you would bet the farm on. Indicated resources. With indicated resources, there's more geological evidence available. The mineral quantities can be estimated with a greater degree of confidence. It's like moving from an educated guess to a well-informed estimate. Companies often use indicator resources as a basis for preliminary economic studies. Measured resources. These are the most reliable. Measured resources have the highest level of geological confidence with detailed and accurate sample. This is the stage where the resource is well understood enough that it could be converted into a reserve with further economic and technical evaluation. 2. Mineral reserves. Now, not all mineral resources are destined to become mineral reserves. A reserve is a subset of a resource that has been carefully evaluated and determined to be economically viable to mine. Reserves are also classified into 2 categories. Probable reserves. These reserves are based on indicated resources and a lower level of confidence compared to proven reserves. Probable reserves are those that have a reasonable likelihood of being mined profitably, but there is still some risk involved. Proven reserves. Proven reserves are the crème de la crème. They are based on measured resources and have the highest degree of confidence. These reserves are almost guaranteed to be mined profitably, and they are the foundation of any mining project's economic assessments. Three, qualified persons. A crucial role of this system is the role of the qualified person, or QPs. These are professionals, geologists, engineers, or other experts who have the experience and qualifications to evaluate mineral resources and reserves. Under systems like the NI 43101 in Canada, only a QP can sign off on the estimates reported by a company. This adds a layer of accountability, ensuring that the data is credible and that the people reporting in know what they are talking about. 4. Public reporting standards. Another critical aspect is how the information is shared with the public. The new frameworks, like the JORC Code in Australia and the NY 43101 in Canada, set strict guidelines on how companies must report their findings. This includes clear definitions, the disclosure of risk, and the separation of resources from reserves. The aim is to make sure that investors and the public get accurate, consistent, and transparent information. 5. Continuous disclosure and updates. The classification system also requires companies to continuously update their resource and reserve estimates as new information becomes available. This means that what is reported is always based on the latest data, reflecting any changes in geology, technology, or economics that could affect the viability of the project. Together, these components create a robust framework that provides transparency, consistency, and the credibility in the mining industry. It ensures that when a company reports a gold discovery, there's a clear understanding of what that means, and it holds companies accountable for the accuracy of their claims. So, why this classification matter? Well, it ensures that investors, regulators, and the public can have confidence in the claims made by the mining industry. It also helps to protect against fraud by making it much harder for companies to exaggerate or fabricate their findings, like Bre-X did. At the end, The Bri Scandal taught the mining industry a hard lesson. Transparency, accountability, and rigorous standards are essential for maintaining trust. And that's why the classification of resources and reservoirs is so crucial today. To recap, the Bri Scandal was one of the most notorious frauds in history, leading to the loss of billions and a crisis of confidence in the mining industry. But from this dark chapter, the industry learned and evolved, creating a system that protects investors and the integrity of mineral resource reporting. So the next time you hear about a massive gold discovery, you can be a little bit more confident that the numbers are real, thanks to the lessons learned from the Bre-X scandal. If you like this video, please share it with someone. Until next time.